23. Markets had a downtrend today. It was a pretty nice one. Caught 25 points, which was my biggest trade so far, and it was on a live account, so that was nice. But let's get into it yesterday real quick. So yesterday, let me turn off these two things. Yesterday starts right here, and it was pretty much a range. I mean, there's the roof, there's the floor, kinda, and bears made new lows towards the end of the day. So it was kind of a bear channel, a wide bear channel. Bulls and bears were making money, so you can't say it was a downtrend, but it had a little bit more bearish power, momentum to it. Bears had a downtrend on the 31st, re-ranged, market ranges again, and then breakout. Bears break out today. We are trading under the 20 EMA on the. This is the bigger time frame EMA. I'm gonna turn it off and leave the bar count on, so it's pretty easy. So it's a pretty good day. Bar one, we have a gap down and we have a flag. Here's the flag, and if you've seen the previous videos, we know we talk about gap downs being bars. So this would be a bar. It would be a bear bar. Yeah, you guys get the picture, and there's the bear flag. One push, two push, and a breakout. I was hesitant to sell here because I thought we were range bound. So we gap down. Bar one is follow through. Bar two is follow through. That's three bear bars. That's selling pressure. Bulls push up. Bears reject it. I think there are more buyers sitting below bar 4 because they think that bulls think we're in a range. Bar 6, we have an inside bar within an inside bar within an inside bar, so this is in a breakout mode. It's a triangle bear flag, and bears get to break out to the downside. This was a news catalyst bar. Bar 7 was a news catalyst. I suspect there are more sellers than buyers seeing these two bears. We are trading under both EMAs, and bears are keeping the gap open. Bar 8 is an inside bar. We have two legs down. People could be taking profits. Bar 10, bulls try and go for the push up and fail at the 50% level of bar 8. Now we have two gaps open. When we have two gaps open with the first hour of the day, it can get trendy. And by gap, I mean bear gap. So this is a bear gap, and this is a bear gap. See how there's one gap, and then right here is a gap. This gap would be right there. So there is a gap there, and this shows us selling pressure. And here's another flag. Bar 10 ends up being a pullback, and bears sell it. This is where I got short because we had two gaps and two flags. I was looking for a third leg down, and that's here we got. On bar 12, we had followed through at lows, so this is not a limit order market, it's a stop order market as bears are making points below bars. So I enter the market and we continue to sell. Bar 16, bulls try and cover their long on bar 13. They get trapped buying highs, they buy more and get out at 50%. For all the bulls that bought at bar 13, they buy more at bar 16 and they make a tick and dump their shares. That causes the market to sell off. Bar 18 is a strong trend bar, no wicks at top. I suspect there are more sellers than buyers below bar 16. Bar 19 is a doji when bar 20 rejects that doji. Dojis are range bars, and we get a trend bar rejecting it. The price is moving lower. Bar 21 is a bear bar, but the wick, we have a big wick, and bulls start to retrace. Bulls get an attempted two legs back to the EMA and fail. Leg 1, pull back, leg 2, and they can't make it to the EMA and they fail. Bar 28 is a strong trend bar for the bears, and they reject bar 27. I think there are more sellers above bar 28, and they're still selling bar 18. Bar 18, Okay, so we came down and we failed to close above bar 18, so now another gap is open here. So the bears are keeping gaps open. The gap starts from this low. So here's one gap. I'm still learning how to read gaps. Gaps are a way to show strength, and you can get really, there's a lot of ways to use gaps. I'm still learning them. And here's another gap. The reason we make gaps is because we can see the bear strength. Look, the bear strength is huge in the beginning of the day. The gap down is the biggest gap, and the gaps slowly start to shrink. This is also could be seen like a shrinking stairs pattern as the prices get contracting, getting smaller. Each leg is getting smaller. I think this was more of an exhaustion leg. Something I wanted to point out is bulls, even though they had a failed second leg, they still made money. And what happened? And bulls don't make money in a downtrend. There's a previous video where I showed this exact setup where bulls made money in a downtrend, and the market's always transitioning. Since bulls made money in a downtrend, this tells me this could be the first leg in a range. We're still on a downtrend, but it's the first leg in a range. There's more evidence that shows this is a range later on. So this is a range. Bar 32, we break out below bar 21. I remember having this as a low, and I see this as a breakout. Bulls are trying to buy lows, but they get trapped and dump the market on bar 36 for another 2 legs down. 1, 2. There's more selling pressure going on, but around 10 a.m. we see a midday reversal. This bar is a bear bar, but look how long. Look how long they've been trending. They need to take profits at some time. With bears taking profits and bulls already making money, I'm starting to think the bear trend is starting to be over. And I actually closed my position at bar 42. I went short on bar 10 and closed on bar 42. So that was about 25 points. We can see strong buying here. This is the strongest buying we've seen all day. I think this is caused by the entire market taking profits and bulls buying lows. This is a support level from an earlier uptrend. See? Yep. So now the market's are in a big range. Look, the markets broke out on August 28th, and now we just came back and retested that. Swing traders are looking at that. Let me drag this chart up a little bit, make it a little bit clearer. Now, this is what's interesting about these gaps. We only have gaps in trending environments. And remember I said this could be the last leg in the trend is the first leg in a range? Look, so bulls show steady buying. This is strong enough to stop the downtrend. At the time, we didn't know that. And bar 48 does look like a good short. I got trapped, but I closed very quick for like less than a point loss. I got long on bar 50 because this was so strong. The bears were over. They're done. They're taking profits. Bar 50, bar 51. There are more buyers below the EMA now. The market has transitioned. Back to the gaps is their gaps get closed in ranges. Look, there are no more gaps. Do you see this whole box? Let me make it transparent. You see how I'm talking about the gaps? The bears and bulls are equal, 50%. No gaps for the bulls, no gaps for the bears. Whereas down here, the bears had strength, so they had more. That's where the gaps are coming from. That's the selling pressure. So that's what I wanted to show about like the gaps versus trending environment gaps versus no gaps in a range-bound environment. And the market starts pushing up. Bulls make 3 pushes up, and bears try and short back to the EMA and get trapped. Bulls do have a mini gap right there that trapped bears, and that caused the last push up. This turnaround point was not by coincidence. I was able to catch along to that because that was 50% of the daily range. Look. See? The market is respecting 50% because it is what people see, as what trap traders see. Bulls that bought down here, they bought more. They keep scaling in, they buy more, they buy more, they buy more. They get out at break even. They get out when the market's at 50% for break even on these trades, and then they make money on the way up. If your account's big enough, you can do that. My account's not. I did get along here and just cut the trade quick. So here we test the 50% level, and it looks like there are sellers, and the market goes into a tight range. That's because bulls see this as if they can clear the 50% level, they're going to go for here. And they're going to start closing those bear gaps we had up earlier. And those gaps become bull targets. So today was a pretty good day, you know. Bears made a lot of money and bulls also made money. It was, if you miss this downtrend, buy low, sell high, the market's range. This is a market cycle, trending into a range-bound environment. The markets move off inertia, so what's been happening will continue to happen. And look at these 3 bars. Inertia means what is happening will continue to happen until there's a force greater than that to stop the force or something like that. So these 3 bars were stronger than this whole downtrend. And since that happened, the market was confused because we had a big down and a big up, and that will leave the market into a range. Big down, big up, big up, big down creates confusion for traders, and that leaves the markets in a range. So today was a good day for the bears. Yeah. Bulls got the price back up to 50%, but that doesn't mean we're bullish. They just pushed the price back up. Although, like I pointed out earlier, we are in an overall range. Excuse me. So, look, if this breakout point holds, we're at range lows now. So, we'll see what happens. I mean, buy low, sell high. I'm down for an uptrend. I'm down to range. I'm down for a breakdown to test the low here. It was a good day. It was a good day for the bears and bulls. I hope you guys made some money and you learned something. Don't forget to hit that follow button for daily breakdowns and more price action tips. Have a good day, everybody.